I have two brand new trading systems for crude oil. First of all, I want to look at the longer term weekly charts. This is crude oil futures going back to 1997. It's non-back adjusted crude oil, so we can see the actual levels. The symbol for that in TradeStation is @CL equals 11INN. If you just do @CL, it is back adjusted, and this high goes above 200, which is not, it's just a back adjusted contract that we use for back testing. But this is the actual levels, so we use a non-back adjusted to see those levels. But you can spot this trend in crude oil. If you remember, crude oil front month was at negative levels, below zero. During the pandemic, suppliers had more crude oil than they needed. There was a glut, and they paid to take the crude oil off their hands. And now crude oil is working higher. Very strong trend. And I anticipate that crude oil, because of inflation and because of other commodities, making new highs, new multi-year highs in the 2011-2012 timeframe. Crude oil could also do the same. And we want to be able to catch those moves. Just to give you an idea, let's take a look at cotton. Just this week, it made multi-year highs since about, if you go back to about 2011, that's where I get these 2011 numbers. If you look at crude oil, those numbers come in at around 115. And so the potential is there. Soybeans, let's look at soybeans. I'm going to change this symbol to soybeans. And you can do the same thing at S equals 11INN. And earlier this year, soybeans in May made highs not seen since 2012. So 2011, 2012 time frame. And these could continue to go higher. Those are just what they've done now. And so I do believe in longer term inflation because of increase in money supply and Fed money printing, and inflation is normal over time. So I could be wrong, but these are some strategies that we can trade. I want to share with you. Oh yeah, first of all, I want to share these with you as well. This is the crude oil prices, 70 years of history back to 1946. So a little more than 70 years. It says 70 years in the headline up here. But you can look at this. This is inflation adjusted. It's log scale, and it shows recessions. And so you can see where crude oil is on the chart, and the spike down and then the spike up. And you've also have this inflation adjusted monthly average crude oil prices. Here is where it is now. This is as of 7/13/2021, so it's not up to date. I found these just at these links up here. Just in Google. So want to share with you two or three trading systems that we could use to capture these moves higher in crude oil. Now there's no guarantee that crude oil would move higher, and there's no guarantee that if it did, these strategies would work. But this is a new version of Cobra Crude, and is a very, very simple strategy. It really only has one rule, and it's not even a parameter-based rule, so it can't be optimized. It's that simple. And this exponential ribbon moving average is not part of the strategy. It's just on the chart. So that's not part of the strategy. But here is what this has done since 2020. And we'll look at further back tests as well. Average trade profit is 154. No, I haven't added slippage and commission yet, but 154 is pretty robust. And you see how it's done. There's some good short trades on this setup when crude oil went below zero. I don't think that will happen again. But since this time frame, you can see it's kind of stabilized a little more. It's not as steep, but it's consistently higher, and it generates a lot of trades. 464 trades since the beginning of July. And I want to show you my existing Cobra Crude strategies because they're good, but they just don't trade as much. And I think there's more opportunity in crude oil than what we see. Now, this is a swing trade strategy, so it does hold positions past the session. And so you have to decide if that's appropriate for your risk. You could get out on Friday and get back in on Sunday night, or I may rewrite the strategy to do that. But the worst case drawdown on a closed trade paces is 54.60. The max drawdown intraday peak to value was 10.650. I want to show you why that's not relevant for your real-time trading at balance, that this number is more important. This is an open position, so you losing money on an open position based on what happened on, I believe, April the 29th. Well, April 29th it hit its peak, but what happened on April the 21st was added and cumulative to that. So if we scroll back here to April 21st, 2020, you see this Cobra Crude short. It goes down here. It goes down to this low level of $7.61. It exits at $14.90. So you have a $4,500 drawdown on this trade. So a $4,500 drawdown on this trade, and then you have a series of losers that adds to that intraday peak to valley drawdown. Now, was that real risk in your account? Are you close? You're not locking in profits based on an open position. It's disappointing to give back $4,500, but this trade was up of $14,000. No, $7,000. $7,000. This is the biggest trade. So the biggest trade gave back $4,500. So while it would be great to capture the high and the low of that move, this is real trading. You give back a lot of the trade, and on a big trade like this, you might give a lot back, and that adds to that open position loss. And so that open position loss is not real risk to a initial trade. And so the initial trade open position is 54.60. Now I'm going to show you the rules of this strategy, except for the one proprietary rule that's not included, that I won't include. So I'm going to show you that. So here is the way this strategy works. I'm going to give you all the rules except the proprietary rule. First one is the start time has to be between the start time and the finish time. It has entry if time is greater than the start time and less than the finish time. And for this setup, the start time is 3 a.m. 3 a.m. and it trades until it finishes at 1400. 3 a.m. to 2 o'clock p.m. and that's exchange time or Eastern Standard Time. And then the second rule is this. We only have one entry per day between midnight and midnight. This is on the 15-minute chart, 24-hour session, less than max daily entries, one max daily entry. We are not even including the don't trade on holiday function on this one. It could use that. And then number 3, proprietary rule with no parameters. And number 4, for a buy signal, we buy at the close. Buy at close minus 0.01 on a limit on a 15-minute chart. And that is it on the entries. Very simple. Very, very, very simple. 3 a.m. Europe opens 1400. That's close to the crude oil close. And let's see. Let's look at the exits now. So the short trades are the opposite of that. Let's look at the exits. Good news is that it does not hold. I was thinking of the other strategy when I said it does not hold past the session close. So it's day trade from the perspective that it starts at 3 a.m. and it trades till 1400 and it exits any position that's still open. It exits at 1645. It uses a $700 stop loss. And that is it. That is how simple this strategy is. Enters when Europe opens, exits. It stops taking. It only takes trades between Europe opens and 30 minutes before crude oil day session ends, and then the extended session ends at 1700. So we exit 15 minutes before the extended session. So you're kind of in this time period where crude oil is most active. You're not really biasing your time period that much. And use a $700 stop loss. You get out at 1645, and that's it. Very, very simple strategy. Because it's a simple strategy, I like this approach on a short time frame. We have this time frame here. There's the equity curve once again. We have the time frame from the beginning of 2020 and also from March of 2020 near the pandemic lows, March, April time frame. Here's 3/23 when the Fed introduced its new stimulus program. And then you see June, right here is June when crude oil stopped trading kind of got out of its negative state when we could start trading it again. Well, I don't know if you remember, a lot of times, a lot of brokers wouldn't let you trade crude oil when it was negative. So you have to consider that. But if we look at this historically, it does not perform as well as it does now. But because it is so simple and crude oil is in a new environment, in my opinion, we could trade. You could potentially trade this if you wanted. That's your risk. It's had last couple of trades are losers. It takes long trades. It takes short trades. We're going to look at the long-term chart of this in a minute. I want to show you my existing crude oil strategy. If we pause for a moment, let's go back and look at all our existing crude oil strategies. 10 crude oil strategies that we currently have algorithms, and I've had these for a while. Cobra Crude I've had for a long time. Here it is. It hasn't. These are actually with slippage and commission. In this workspace, these actually include slippage and commission. And so 96.62 average trade profit, 72.25 drawdown, and it continues to make equity peaks, and it's currently in a drawdown. So it's a good time to start trading this. That we've struggled with crude oil because they've all kind of trended down. All the equity curves have kind of trended down at the same time, and so it's been a challenging market to trade in crude oil right now. And the reason is because our SR counter trends, these strategies right here, these all buy the dip. And so if the market's going up and you buy that dip, these waves, we're getting crude oil spiking a little bit. It's not dipping much. It goes up without dipping, and then when it does dip, it takes a large dip. And so it stops out. So when we buy the dip, it stops us out because the dip is so large. And then these moves that we've seen are happening at night. And so we're missing some of those on the Cobra Crude strategies. Our trend strategies are missing them. So that is why we have this new strategy, Cobra Crude, that's actually more simple, but it starts out at night, and to make sure we don't miss those moves that happen at night. And you see the results of Cobra Crude. This is a long-term strategy. Here's the aggressive version of it. It's a little bit more aggressive in its trading approach, and you see it's also in a little bit of a drawdown here. Not different from the past. These all include slippage and commission. It has a lower average trade profit. These are day trade, gap fill, and reverse. This is a counter trend strategy. Put this in our book, Algorithmic Trading Systems. It's kind of gone sideways. Sometimes we see strategies go sideways for a while, and then they perform. We've seen Cobra do that in the indexes. Now let's look at the SR counter trends. These have been our biggest. Losers. SR counter trend 2 and SR counter trend 4. These have been our biggest losers in the crude oil setup, but the others, not too bad. They've just all gone through a drawdown at the same time, a normal drawdown at the same time. SR counter trend 3A, and so this could be a very good time to start trading crude oil and these strategies because they're in a drawdown. I'm eliminating SR counter trend 4 and SR counter trend 3B to get rid of some redundancy in some of these setups. I do favor the Cobra strategies, and I do favor the trend strategy that I just showed you, the new Cobra strategy that I just showed you. Here's SR counter trend 2 V2M, the 1 minute, the 5 minute. I mean, they're not bad. They're not terrible. They're just all kind of down at the same time. So these are the current strategies. The Cobra Crudes are my favorite for this market, because these dip buying strategies, there could be a lot of volatility. If crude oil makes high, we could see, $4 and $5 pullbacks, and it's better to get in on the run up than to try to buy the pullback if crude oil does that. So this is Cobra Crude. Once again, I'm going to close this workspace because I don't want it to crash if I increase the data. So I'm going to close this workspace now that we've taken a look at all these, and then I'm going to go back and look at the longer term charts on the new Cobra Crude 2020. So here is the reality of this trading system. It does not look great before 2020. So we're in a new mode. Is it worth trading it right now? That is the uncertainty that we have to take on as traders. If we say we're in a new market environment, and I'm willing to risk this, $6,000 drawdown on this strategy, start when it's in a little bit of a drawdown, and then risk it. Should we do that? Because it is such a simple strategy. It isn't optimized. You could say, oh, it's optimized. But I showed you the rules. The one rule that's proprietary is a very simple non-parameter based rule. It does not use optimization. So The stop loss is the same as our current Cobra Crude, and you can see that it has had some nice performance in, I believe, previous bull runs, and it's even stronger now. And so, is this the in the past we've had the new strategies that we've released in certain market environments where we think the market may be changing, and with short back test. I know that when I first started trading, I only had 1.5 years of data that I was using, and I had some success doing that using a group of strategies with just 1.5 years of data. So if we see a market like this with a simple strategy like this, if this expands, then it could continue. This market may potentially it could go into a worst case drawdown too. It could start doing this. But I think the market environment here is different than the one we're in right now, and I think it will stay that way for a while. But again, there is still uncertainty as always in trading systems. So I wanted to share the longer term chart with you as well. And when I put this in the portfolio calculator with slippage and commission, it's going to be ugly. It's going to fall into the emerging strategy group. We used to have an emerging strategies, and we got away from that. I don't necessarily like to have strategies that have less than about 5 to 7 years of a back test, but I don't plan on doing that with a large group of strategies. But with crude oil, I would consider doing this. Consider that if it's within your risk tolerance. So wanted to share that with you. Also, the new strategy that we have, I have the zigzag indicator on there. This is not using these zigzag as part of the strategy. So here is another strategy. Brand new strategy. Also, it's a swing strategy. So this one does hold positions longer term, and it uses a profit target and a stop loss. And this is the back test of 2009. So big average trade profit 259 because the holding period is longer. A lot fewer trades 366. Here is the equity curve. Very nice equity curve. And so this is a swing trade. The other is a day trade. And I'm going to show you the results of that. So not the results, but the stop loss and profit target. Stop loss is 2,000. Profit target is 2,000. This might be a micro strategy to trade since it is swing trade, since the stop loss and profit target are pretty large. And this does not use a zigzag indicator. It actually uses the exponential moving average ribbons. And it's a very simple strategy. It also has one condition, and then it buys on a limit order. So very, very simple strategies. I have a third strategy. First of all, this is an extended video. I'm going to make I have a short version of this video as well. But I want to go back. You have the swing strategy, and there's a third strategy I want to share with you, and then there's the day trade strategy. I want to go over this one more time, some further validation of this. Placing this on bonds on a 5-minute chart, this one actually holds positions overnight. The exit time is 16:45, and so it ended up not exiting at 16:45 because this is on exchange time, and there is no bonds is on central time, and so it doesn't ever exit at the end of the day. So as a swing strategy, this is what it looks like on the 5-minute chart in bonds. Same exact parameters and code, and so big drawdown. You saw that during the pandemic. You saw this huge drawdown, and it's currently in a drawdown. So could be a good time to start trading it. It's 5-minute bonds. NASDAQ 15-minute chart. Day trade has a stop loss and $4,600 drawdown. Here is the equity curve. So nice trades in bonds and NASDAQ. And so a lot of potential opportunity for this because it is based on one of my longer term strategies, Cobra. And so third strategy to trade crude, I've gone over my day trade. I've gone over my swing trade. The third strategy you can use to trade crude is NASDAQ 60-minute breakout. And I optimized it for the last 2 years, and then I did a test back to 2017. And here are the results. Not a lot of trades, 90 trades, it's long only, $483 average trade profit. And there's probably a good breakout strategy. I've tested the 60-minute breakout for NASDAQ on some other commodities, on some other commodity markets, and this could be a good strategy to trade commodities with. And so an inflationary breakout trade for commodities could be a 60-minute breakout. It could also be this strategy that tries to catch a move as it moves higher towards the breakout level. After being at highs, it kind of rotates around. And so these are 3 ways to trade crude oil potentially as it moves higher. This one is long only, this swing trade is long only, and the Cobra strategy is long and short, and this is the day trade as well. So those are the latest reports and what I wanted to share with you. There are other ways to trade crude oil in equities with options, but from a trading systems perspective, trading futures, these are some of my favorite approaches along with some of my existing crude oil trading